The email went out at 7:43 a.m. on a Monday. Company-wide. 412 recipients. I know the exact number because I checked the sent folder 3 times before I hit send. The way you check a door lock when you already know it's locked, but the act of checking is the point. The subject line was 11 words. Notice of withdrawal of informal advisory services. Effective immediately. I'd written it at 11 p.m. the previous Sunday, sitting at my kitchen table with a cup of tea that had gone cold, and I'd revised it exactly once, changing discontinuation to withdrawal because withdrawal is a word that implies something was being given voluntarily, which was the entire point. By 8:15 a.m., my phone had 23 unread messages. By 9 a.m., it had 61. By 9:30, the VP of Human Resources had called twice, back to back, with the particular persistence of someone who believes that a second call within 4 minutes communicates urgency rather than panic. It communicates panic. I let both calls go to voicemail. I was in the middle of something. My name is Renata Solis. I'm 44 years old. For 14 years, I was the senior systems architect at Vantage Data Infrastructure, a mid-size enterprise technology firm headquartered in Austin, Texas, with satellite offices in Atlanta, Denver, and Toronto. We built and maintained data pipeline infrastructure for financial services clients, banks, insurance companies, asset managers, the kind of clients who don't tolerate ambiguity, don't accept excuses, and measure reliability in fractions of a percentage point. Our SLA commitments were 99.97% uptime. I delivered 99.98% for 6 consecutive years. The difference between those two numbers is approximately 2.6 hours of downtime annually. I gave our clients 2.6 hours they weren't owed every year for 6 years because I built systems that didn't fail and then maintained them with the vigilance of someone who understood that in financial data infrastructure, failure isn't an inconvenience. It's a liability event. Here's what 14 years at Vantage looked like in numbers, because numbers are the language that companies claim to speak until the numbers are about a person rather than a product. I designed and deployed the Helix Data Routing Framework in 2013, a proprietary pipeline architecture that replaced our legacy batch processing system and reduced data latency for our top-tier clients from 4.2 seconds to 0.3 seconds. Helix handled $4.7 billion in daily transaction data across 23 client environments. It had never gone down during a market trading window. Not once. Not in 11 years. I built the Sentinel Compliance Monitoring System in 2017, which automated regulatory reporting for 31 financial services clients across SEC, FINRA, and SOX compliance frameworks. Before Sentinel, compliance reporting required a 4-person team working 60-hour weeks during quarterly reporting periods. After Sentinel, it required 1 analyst and a review meeting. The labor cost reduction was $890,000 annually. The error rate dropped from 3.2% to 0.04%. I created the Apex Client Integration Protocol in 2019, a standardized onboarding framework that reduced new client integration time from an average of 14 weeks to 6 weeks. In the 3 years following Apex's implementation, Vantage onboarded 18 new enterprise clients, generating $34.2 million in new contract revenue. Our client retention rate was 96.8%. I know this because I tracked it. I tracked everything. It's a habit that turns out to be useful. The personal cost was the standard inventory of sacrifices that competent people make for companies that treat competence as a baseline expectation rather than a compensable asset. I hadn't taken a full weekend off in 3 years. I'd missed my sister Elena's wedding rehearsal dinner because a client in Atlanta had a pipeline failure at 4 p.m. on a Friday, and I was the only person who understood the Helix routing logic well enough to fix it in under 2 hours. I fixed it in 94 minutes. I made it to the wedding. I did not make it to the dinner, and Elena forgave me with the grace of someone who had been watching me do this for years and had decided that forgiveness was more useful than resentment. She was right. She usually is. I'd missed my daughter Sophia's first school play. I'd missed 2 Thanksgivings, not the whole day, just the part where you're present rather than physically in the room while mentally debugging a data integrity issue on your laptop in the kitchen. James, my husband, had a phrase for this. Renata's here, but she's not here. He said it without accusation, which was somehow worse than if he'd said it with accusation, because it meant he'd accepted it as a condition of our life, rather than a problem to be solved. I was the person who kept Vantage's technical infrastructure running. Not as a team. Not collaboratively, in the sense that the word is used in performance reviews to mean she works well with others. Specifically, personally, and with a depth of institutional knowledge that existed in no documentation, no manual, no shared repository. Because Vantage had never invested in knowledge management the way it had invested in client entertainment and executive compensation. I was the documentation. I was the manual. I was the institutional memory of a $180 million company, and for 14 years, I had been paid like a senior individual contributor rather than the critical infrastructure I actually was. The promotion to principal architect had been discussed for 3 years. Not promised. I want to be precise about that, because precision matters and because the difference between discussed and promised is the difference between a reasonable expectation and a contractual one. My direct manager, a man named David Okafor who was competent, fair, and constitutionally incapable of delivering bad news without first delivering 4 paragraphs of context, had told me in my 2021 performance review that I was the strongest technical candidate in the organization for the principal role and that the promotion was a matter of timing, not merit. He said the same thing in 2022. In 2023, he said it again, and added that the company was evaluating the organizational structure, which is what people say when a decision has already been made and they don't want to be the one to tell you what it is. The decision was announced on March 4, 2024. I was in conference room 7B, a glass-walled room on the 3rd floor that faced the parking garage, which I mentioned because the view from 7B was a concrete wall. And I had spent a significant portion of my career in that room looking at a concrete wall while discussing things that mattered, which feels, in retrospect, like an accurate metaphor. David had called the meeting. He'd asked me to come alone, which told me something. He'd brought coffee, which told me more. Renata, he said, I want to talk to you about the principal architect decision before the announcement goes out. Okay. The company has decided to go in a different direction for the role. I looked at him. He was looking at the table, which was his version of eye contact when the conversation was difficult. David was a good manager in the ways that matter and a limited one in the ways that also matter, and the limitation was this. He believed that delivering bad news carefully was the same as delivering it kindly, and it isn't. It's just slower. Who? I asked. Marcus Holt. I knew the name. Everyone at Vantage knew the name, though most people knew it the way you know the name of a weather system, as something approaching from a distance that you'd been told to prepare for. Marcus Holt was 34 years old. He had been at Vantage for 14 months. Before Vantage, he'd spent 3 years at a SaaS startup in San Francisco that had been acquired and dissolved, and before that, 2 years at a consulting firm where, as far as anyone could determine, he had primarily produced slide decks. His technical background was in product management, not systems architecture. He had never built a data pipeline. He had never managed a compliance framework. He had, to my knowledge, never been responsible for infrastructure that processed a single dollar of client transaction data. He was also the son-in-law of Vantage's CEO, Warren Holt. Different last name, Marcus had taken his wife's surname, which I mention not as a judgment, but as a fact that becomes relevant when you're trying to understand how a man with 14 months of tenure and no systems architecture experience becomes principal architect of a company whose technical infrastructure was built by someone else over 14 years. Marcus Holt, I said. Yes. Warren feels that Marcus brings a strategic perspective that complements the technical depth already present in the team. The technical depth already present in the team. Renata. David, Marcus Holt asked me last Tuesday what the difference was between a data lake and a data warehouse. I explained it to him. He took notes. David looked at the table again. I know. He's been asking me questions for 14 months. Every week. Sometimes twice a week. I've been answering them because I thought he was learning the business. I didn't realize I was training my replacement. The decision came from Warren directly. I want you to know that I advocated for you. I want you to know that clearly. I believe you. And I did. David's advocacy had the specific ineffectiveness of a man arguing against a decision that was never actually open to argument, which is its own kind of futile loyalty, and I respected it even as I recognized its limits. Marcus Holt was announced as principal architect at 2 p.m. that afternoon in a company-wide email from Warren that described him as a visionary technical leader with a unique ability to bridge strategic and operational excellence. The email did not mention my name. It did not mention Helix or Sentinel or Apex or the 99.98% uptime or the $34.2 million in new client revenue or the $890,000 in annual labor savings or the 14 years. It mentioned Marcus's fresh perspective and his commitment to innovation, which are phrases that mean nothing and are used specifically because they mean nothing, because meaning something would require specificity, and specificity would require evidence. And evidence was the one thing that didn't support this decision. Marcus sent me a Slack message at 2:47 p.m. Renata. So pumped to be stepping into this role. I'm going to need to lean on your expertise heavily as I get up to speed. Can we set up a weekly sync? I'm thinking we call it Knowledge Transfer Tuesdays, Rocket. I read the message. I read it again. Knowledge Transfer Tuesdays. He'd named it. He'd already named the process by which I would continue doing what I'd been doing for 14 months, answering his questions, explaining his job to him, providing the technical foundation for a role he'd been given without earning. And he'd given it a name with an emoji, as though branding the extraction made it a collaboration. I closed Slack. I opened a new document. I began writing. I wrote for 4 hours that Sunday evening. Not in anger. I want to be clear about that, because the email I wrote is sometimes described as angry, and it wasn't. Anger is reactive. What I wrote was deliberate. There's a difference, and the difference is in the revision process. Angry writing gets worse when you revise it. Deliberate writing gets better. I revised the email 6 times. Each revision made it shorter, more precise, and more devastating in the specific way that precision is devastating, not because it attacks, but because it simply describes, and the description is enough. The final version was 247 words. I'll tell you what it said. If this story is already resonating with you, if you've ever been the person everyone leans on while someone else gets the title, make sure to like and subscribe. I share workplace strategy and corporate analysis every week that might just change how you navigate your career. Because what happened after that email went out didn't just change my situation. It exposed something that Vantage Data Infrastructure had been hiding in plain sight for 14 months. And it started with 247 words and a send button. What Marcus Holt didn't know, what he couldn't have known, because knowing it would have required him to understand the systems he'd just been handed, which would have required him to understand systems, which would have required him to understand something, was that the email was not the leverage. The email was the announcement. The leverage had been accumulating for 14 months, quietly, in the background, the way interest accumulates in an account you've stopped checking because you already know the balance is sufficient. Let me explain what I mean by that. Helix, Sentinel, and Apex were not just systems. They were architectures, living, interdependent structures that required ongoing calibration by someone who understood not just what they did, but why they were built the way they were built. Helix's routing logic, for instance, was not documented in Vantage's internal wiki. It was documented in my personal technical journal, a practice I'd started in 2011, 2 years before Helix existed. Because I'd watched a colleague at a previous company lose 3 months of work when a server migration wiped an undocumented configuration. I kept the journal on principle. I kept it on my personal encrypted drive on principle. I kept it updated quarterly on principle. None of this was strategic originally. It was just good engineering practice that happened to function, under the right circumstances, as something else entirely. The right circumstances arrived on March 4, 2024, at 2 p.m., when Warren Holt announced that his son-in-law was a visionary. That evening, I sat at my kitchen table, the same table where I'd later write the email, and I did something I'd been doing for 14 months without fully acknowledging why. I reviewed my personal documentation. Not Vantage's documentation. Mine. The technical journal. The configuration notes. The calibration logs for Sentinel's compliance reporting engine, which required a manual parameter adjustment every quarter that I had never formalized into Vantage's systems because the adjustment was intuitive to me and I had never been asked to formalize it and no one had ever thought to ask. The Apex onboarding protocol's client-specific customization files, which lived in a folder on my personal drive because the original Apex deployment had been done from my personal machine during a weekend sprint in 2019, and I'd never migrated the source files to the company server because the company server at the time had a storage allocation issue, and I'd meant to migrate them later, and later had become never, the way later always does. I wasn't planning anything that evening. I was just looking at what I had. And what I had was this: the complete operational knowledge of Vantage Data Infrastructure's 3 core technical systems, residing in documentation that belonged to me, maintained by me, on hardware that was mine, and accessible to exactly one person. Me. I closed the drive. I made a cup of tea. I thought about Knowledge Transfer Tuesdays. Then I opened a new document and started writing an email. The subject line went through 7 drafts. The first was too aggressive. The second was too passive. The third was accurate, but too long. By the 7th, I had 11 words that said exactly what I meant and nothing I didn't. Notice of withdrawal of informal advisory services, effective immediately. The body of the email was 247 words. I'll summarize. I noted that for the previous 14 months, I had provided informal technical advisory services to Marcus Holt, including system architecture explanations, configuration guidance, compliance framework orientation, and client integration support. I noted that these services had been provided voluntarily, outside the scope of my formal job description, without compensation or formal acknowledgement. I noted that effective immediately, I would no longer be providing these services in any form, verbal, written, or electronic. I noted that any questions regarding Helix, Sentinel, or Apex should be directed to the principal architect, whose role, as I understood it, was to manage exactly these systems. I wish the team well. I signed my name. 247 words. 412 recipients. Send. 2 days later, at 6:17 a.m., early enough that I was still in the kitchen with my first coffee, watching the light come through the east-facing window of our house in South Austin, my phone rang. Marcus. I let it go to voicemail. The voicemail was 3 minutes and 40 seconds long, which is a significant amount of time to fill with words when you don't have anything specific to say, and Marcus did not have anything specific to say. What he had was a problem he couldn't name because naming it would require understanding it. Renata, hey, it's Marcus. So, listen, I've been looking at the Helix dashboard this morning, and there's I think there's a routing anomaly. The latency metrics are showing something weird on the Cascade financial environment. Like the numbers are, they're not where they should be, and I've been trying to find the calibration documentation in the system wiki, but I'm not seeing it. And I know you said in your email that I totally respect your decision. This is a client-facing issue, and I want to make sure we're handling it with the right operational bandwidth. So if you could even just a quick call, 5 minutes, just to point me in the right direction. The voicemail ended there. Not because he'd finished his thought. Because the 3 minutes and 40 seconds had run out. I listened to it once. I did not call back. I did not text. I opened my laptop and sent a single-line email to David Okafor, copied to Patricia Nguyen in HR. Please note that I received a voicemail from Marcus Holt at 6:17 a.m. requesting technical guidance regarding Helix system configuration. For my company-wide notice dated March 11th, I am not in a position to provide this guidance. I wanted to document this contact for the record. Documentation. It's a habit. The Cascade financial latency issue was not a crisis yet. It was a warning, the kind of early-stage system drift that Helix's monitoring dashboard flagged at the amber level, not red, which meant it was addressable if you knew what you were looking at and urgent if you didn't. Marcus didn't. By the end of that first day, the latency on Cascade's environment had climbed from 0.3 seconds to 1.7 seconds. Still within SLA. Still amber. Still the kind of thing that resolves itself if you apply the correct routing weight adjustment to the Indianapolis node cluster, which takes about 8 minutes if you know where the adjustment lives in the configuration interface. Marcus did not know where the adjustment lived. He knew it existed because I had told him it existed in October during one of our informal sessions, and he had nodded and written something in his notebook. What he had written, I later learned from Priya Chandrasekharan, a junior systems analyst who sat 3 desks from Marcus and had the specific misfortune of being competent enough to understand what was happening and junior enough to be unable to stop it, was the word routing, followed by a question mark. Priya texted me that evening. The Cascade environment is at 2.1 seconds. Marcus asked me to look at it. I don't have access to the Helix configuration layer. He said he'd escalate it. I don't think he knows what escalating it means. Is it affecting client reporting? I asked. Not yet. Tomorrow's the Cascade quarterly data pull. If it's not resolved by 6 a.m., their compliance report will pull from a degraded data stream. I know, I said. Renata. Priya. Document everything you're seeing. Times, metrics, what Marcus says, what he does. Keep it somewhere personal. A pause. Then, okay. By the end of the week, Cascade Financial's quarterly compliance report had pulled from a degraded data stream. The latency had peaked at 3.8 seconds during the 6 a.m. data pull, 13 times the design threshold, and the Sentinel compliance engine, which was calibrated to flag data integrity issues above 1.2 seconds of source latency, had done exactly what I'd built it to do. It flagged the report as potentially compromised and held it in a review queue rather than auto-submitting to the client portal. The review queue required a principal architect sign-off to release. Marcus had not known the review queue existed. He discovered it at 8:45 a.m. when Cascade Financial's compliance officer, a meticulous woman named Diane Reyes who had been receiving clean, on-time reports from Vantage for 6 years, called to ask why her quarterly report hadn't appeared in the portal. Marcus called me at 9:02 a.m. I let it go to voicemail again. This one was 4 minutes and 12 seconds. Renata, it's Marcus. Listen, I need you to understand that this has become a significant client impact situation, and I think we need to set aside the interpersonal dynamics here and focus on the business continuity piece. Because Cascade is a $2.8 million account and Diane Reyes she's not happy, and I've been trying to navigate the Sentinel interface, but there's a review queue that I can't. I don't have the authorization credentials to release the report, and I've asked IT and they said the credentials are tied to the principal architect role, but the system is showing my credentials as I don't know insufficient, and I just need someone to walk me through the release protocol because this is a time-sensitive. The credentials weren't insufficient. The credentials were correct. The problem was that releasing a flagged report from Sentinel's review queue required a secondary authentication through a security module I'd configured in 2021. And the secondary authentication was tied to a biometric profile that was registered to my account, not the principal architect role generically, because when I'd set it up, I'd been the principal architect in practice, if not in title. And I had configured it to my profile because that was the most efficient implementation at the time. And I had documented this in my personal technical journal on page 147 under the heading Sentinel Security Layer Authentication Architecture in an entry dated February 3, 2021. Page 147. Personal Drive. Mine. I sent Marcus a single email at 9:15 a.m. The Sentinel Review Queue Release Protocol is documented in the system's security architecture files. I'd recommend contacting the original system architect for access. Best, Renata. I was the original system architect. He knew that. I knew that. The email knew that. The difference was that the email was now part of the documented record. And the documented record was becoming a very detailed portrait of a company that had promoted a man who needed 4 minutes and 12 seconds to describe a problem he couldn't name to a person he'd replaced. Diane Reyes called David Okafor directly at 10:30 a.m. David called me at 10:47. He didn't ask me to fix it. He was too careful for that, and too aware of the legal landscape that Patricia Gwynn had presumably outlined for him after my documentation email. What he said was, "Renata, I want you to know that I'm aware of the situation with Cascade, and I want you to know that I'm not calling to ask you to do anything. I wanted to hear your voice." That was the most honest thing David Okafor had ever said to me. I appreciated it. "I'm fine, David," I said. "How's the team?" "Scared," he said. Quietly. 2 weeks in, the situation had acquired the specific momentum of a thing that was no longer a crisis and had become a condition. Cascade Financial had received their compliance report 4 days late after Warren Holt personally called me, not Marcus, Warren, and asked, with the careful phrasing of a man who had been briefed by legal, whether I would be willing to provide limited transitional support on a consulting basis. I told him I'd consider it. I sent him a consulting rate sheet the following morning, $340 per hour, 4-hour minimum engagement, all work product owned by me until payment was received in full, and a scope limitation clause specifying that my consulting services covered advisory guidance only and did not include knowledge transfer, training, or documentation of proprietary systems I had developed. Warren did not respond to the rate sheet. Cascade's report was eventually released by an emergency IT workaround that took 11 hours and cost Vantage $47,000 in overtime and external contractor fees, and which produced a report that Diane Reyes accepted under protest, noting formally that the data integrity flag had not been resolved, merely bypassed. Cascade's annual contract was worth $2.8 million. Their renewal window was April 15th. It was currently March 22nd. Then Meridian Asset Group called. Meridian was Vantage's second-largest client, $4.1 million annually, a relationship I had personally managed for 9 years. Built on the specific foundation of trust that develops when a client knows that the person on the other end of the phone understands their systems better than they do and will tell them the truth about what's wrong before they have to ask. Meridian's CTO was a man named Robert Fenn, who had my personal cell number and had used it exactly 4 times in 9 years, each time for something that genuinely warranted it. He used it on March 25th. Renata. His voice had the particular flatness of a man who is controlling something. "I've been trying to reach someone at Vantage about our Q1 data reconciliation. I've spoken to Marcus Holt twice. I want to be direct with you. I don't understand what's happening over there, but the person I've been speaking to does not appear to understand our integration architecture. I'm not in a position to speak on Vantage's behalf, Robert. I'm not asking you to. I'm asking you, personally, whether I should be concerned." I thought about that for a moment. Robert Fenn had trusted me for 9 years. He deserved an honest answer, and an honest answer didn't require me to say anything about Vantage at all. "I'd recommend reviewing your SLA terms," I said. "Specifically the data integrity provisions in Section 4. And I'd document every interaction you have with Vantage's technical team going forward." Silence. Then, understood. "Robert, for what it's worth, the Apex integration files for your environment are clean. The architecture is sound. Whatever happens, the foundation I built for you is solid." "I know," he said. "That's why I called you." He called me, not Marcus. He called me, not Warren. He called the person who had built the thing, because when the thing starts showing cracks, you don't call the person with the title. You call the person with the knowledge. And the knowledge was still mine. Marcus called me 4 times that day. The 4th call, at 7:48 p.m., he left a voicemail that was different from the others, shorter, quieter, stripped of the corporate vocabulary that had been thinning with each successive contact like a language being forgotten under pressure. "Renata, I know you're not going to call me back. I need you to know that I'm trying. I'm really trying. And I don't know what I don't know, and that's the problem, and I don't know how to fix that." I listened to it twice. Not with satisfaction. I want to be precise about that. With recognition. He'd finally said something accurate. He didn't know what he didn't know. That was, in fact, the problem. It had always been the problem. The difference was that now it was his problem, and the company's problem, and Cascade Financial's problem, and Meridian Asset Group's problem, and the problem was $6.9 million wide and getting wider. And the person who could have prevented it was sitting in her kitchen in South Austin, listening to a voicemail from a man who had been handed her career and was only now beginning to understand what he'd been handed. I deleted the voicemail. I opened my laptop. I had 3 consulting inquiries in my inbox from firms I'd spoken to the previous week, and a preliminary offer from a company in Chicago that I hadn't responded to yet because the timing hadn't felt right. The timing was starting to feel right. Before I tell you what happened in week 3, when the regulatory piece surfaced and the number on the board stopped being theoretical, I want to ask you something. Have you ever wondered exactly what to say when your company comes back asking for help after they've already shown you what you're worth to them? What the right terms are, and how to say them without sounding bitter or desperate or anything other than exactly what you are, someone who knows the value of what they have. That's exactly what I'll break down in next week's video, with specific language and a framework you can use. Make sure you're subscribed, because that conversation is one you don't want to walk into unprepared. 3 weeks in, Vantage Data Infrastructure was failing in 3 directions simultaneously, which is an impressive achievement for a company that had spent 14 years building systems specifically designed to prevent failure. The systems hadn't failed. The systems were fine. The systems were, in fact, performing exactly as designed, flagging anomalies, holding compromised data in review queues, generating compliance alerts, doing all the things I had built them to do. The failure was in the layer above the systems. The human layer. The layer that was supposed to understand what the systems were saying. Marcus did not understand what the systems were saying. By March 28th, 3 weeks and 2 days after my email, the Helix routing degradation had spread from the Cascade financial environment to 2 additional client environments, Northgate Capital Partners and Brennan and Associates Wealth Management. The spread was predictable, and I had predicted it, not to anyone at Vantage but to myself, in a note I'd added to my personal technical journal on March 12th, the day after the email went out. Helix routing weights are interdependent across the Indianapolis node cluster. If the Cascade calibration drift isn't corrected within 10 days, the weight imbalance will propagate to Northgate and Brennan. Estimated propagation timeline, 18 to 22 days. It propagated on day 19. I noted that too. Northgate Capital Partners was a $3.3 million account. Brennan and Associates was $1.9 million. Together with Cascade's $2.8 million, that was $8 million in at-risk annual revenue sitting in degraded data environments, and the degradation was now visible enough that clients were noticing without being told. Northgate's operations director, a precise and unhurried man named Thomas, who had been working with Vantage since 2016, sent a formal written inquiry to Warren Holt on March 29th requesting a detailed technical explanation of the current data integrity status across our integrated environments and a remediation timeline with specific milestones. Thomas, did not send informal emails. Thomas, sent formal written inquiries, which meant the situation had crossed the threshold from operational concern to documented grievance, which meant it was now a legal record. Warren forwarded Thomas's email to Marcus. Marcus forwarded it to David. David called me. Renata, I'm not asking you to fix anything. I just want to understand, is there a remediation path that doesn't require your direct involvement? Yes, I said. You'd need someone with deep Helix architecture knowledge to access the Indianapolis node cluster configuration, identify the routing weight drift across all 3 affected environments, recalibrate the weights against the original baseline parameters, and verify the correction against the Sentinel monitoring thresholds. It's about 6 hours of work for someone who knows the system. And for someone who doesn't? Longer, I said. Significantly. How significantly? David, the baseline parameters are in my technical journal. The journal is on my personal drive. Silence. The particular silence of a man doing arithmetic he doesn't want to finish. How much would it cost, he said carefully, to engage you as a consultant to resolve the Helix routing issue across all 3 environments? My rate sheet is on file with Warren. He hasn't responded to it. I'll talk to Warren. Warren's response to my rate sheet, relayed through David the following morning, was that Vantage's legal team had concerns about the consulting arrangement and wanted to discuss the ownership status of certain technical documentation. This was the moment I had been waiting for, not with anticipation exactly, but with the calm recognition of someone who has read the script and knows which scene comes next. I called Patricia Nguyen in HR, not because HR was the right department for this conversation, but because Patricia was the person who had been copying my documentation emails and therefore understood the evidentiary landscape better than anyone else at Vantage. Patricia, I said, I understand Vantage's legal team has questions about documentation ownership. I want to make sure they have the relevant context before they form a position. What context? My employment agreement. Specifically Section 7, the Intellectual Property Clause. It covers work product created using company resources during company time. My technical journal was created on personal hardware, maintained on personal time, and updated outside of business hours. I have timestamped access logs going back to 2011 that confirm this. I also have the original Apex source files, which were developed during a personal weekend sprint in 2019 on my personal machine, predating the company's formal project authorization by 11 days. I have the email chain confirming the authorization date. Patricia was quiet for a moment. Renata, did you anticipate this conversation? I anticipated the possibility of it, I said. So I kept good records. Of course you did. The legal threat evaporated within 48 hours. Vantage's outside counsel, after reviewing the documentation I'd provided through my own attorney, a sharp and economical woman named Claire Osei who charged $380 an hour and was worth considerably more, sent a letter withdrawing any claim to the technical journal or the Apex source files and acknowledging that the materials in question were personal property. Claire sent me the letter with a one-line note. They looked at the timestamps and decided not to. That was the week Priya Chandrasekharan stopped being a junior analyst and started being a witness. She had been documenting everything, as I'd asked, times, metrics, Marcus's statements, the decisions he made and the ones he deferred and the ones he made incorrectly, and then tried to reverse. She had a folder on her personal drive that was 47 pages long by the end of week 3, and she sent it to me on a Thursday evening with a message that said, I don't know if you need this, but I thought you should have it. I needed it. I didn't tell her that yet. The cumulative financial picture by the end of week 3, $8 million in at-risk client revenue across 3 degraded environments, $47,000 in emergency IT contractor costs from the Cascade workaround, $23,000 in overtime for Vantage's internal team attempting manual Helix diagnostics without the configuration documentation, a formal written inquiry from Thomas while at Northgate that was now part of the legal record, and a regulatory dimension that had just surfaced, quietly, from a direction Marcus hadn't been watching. The SEC's examination unit had sent Vantage a routine data request on March 31st, the kind of request that arrives every 18 to 24 months for firms providing compliance infrastructure to registered investment advisors. The request required Vantage to produce documentation of its data integrity protocols and demonstrate that client compliance reporting met the accuracy standards specified in its service agreements. Under normal circumstances, this request would have taken me 4 hours to respond to, pull the Sentinel compliance logs, generate the integrity verification report, attach the protocol documentation, submit. I had done it twice before. The response template was in my personal files because the response template was something I had created, and the things I created lived where I kept them. Under current circumstances, the request sat in Marcus's inbox for 6 days before he understood what it was. Priya was the one who flagged it. She sent Marcus a Slack message on April 6th. The SEC data request has a 15-day response window. We're on day 6. Marcus forwarded it to Warren with a message, FYI, legal issue, need guidance on response protocol. Warren forwarded it to Patricia. Patricia called David. David called me. The SEC request, I said, before he could frame the question. Yes, the response template is in my files. The Sentinel compliance logs are accessible through the system, but the integrity verification report requires a manual parameter input that's documented in your technical journal. Page 203, I said. Under Sentinel Compliance Reporting, SEC Response Protocol. Entry dated September 14th, 2022. Renata. David's voice had acquired something I hadn't heard in it before. Not desperation. David was too controlled for desperation. Something more like grief. What would it take? To respond to the SEC request? To come back? To fix this? To whatever version of this you're willing to consider. I looked out the window. It was early April in Austin, and the live oaks were doing what they do in April, that particular green that exists for about 3 weeks before the heat flattens everything into summer. I had a meeting with the Chicago firm in 2 days. Their preliminary offer was $287,000 base, a 22% bonus target, and a title that had the word principal in it and meant it. I'll think about it, I said. But David, the answer isn't me coming back. The answer is Vantage understanding why this happened. Those are different conversations. By week 5, the board knew. Not because Warren told them. Warren had been managing the board's information diet with the careful selectivity of a man who understood that the full picture would raise questions he didn't want to answer. The board found out because Thomas, while at Northgate Capital Partners, was on Vantage's advisory board, a fact that Warren had apparently not weighted appropriately when he decided to let Thomas's formal inquiry sit unanswered for 11 days. Thomas raised the operational situation at the April 14th board meeting, not as a complaint, but as a question. Can someone explain the current technical leadership transition and its impact on client service delivery? He asked it in the measured tone of a man who already knew the answer and wanted it on the record. The board meeting lasted 4 hours. I know this because Gerald Ashworth, Vantage's lead independent director, a 67-year-old former CTO who had joined the board in 2019 and who had, on 2 separate occasions, told Warren that the company's knowledge concentration risk was a governance issue, not just an operational one, called me the following morning. "Miss Solis," he said, "my name is Gerald Ashworth. I'm on Vantage's board. I'd like to have a conversation with you if you're willing." "I'm willing," I said. "I want to be direct. The board has spent the last 24 hours reviewing the operational situation, the client impact, the regulatory exposure, and the circumstances of your departure. We have questions about the appointment process for the principal architect role. We have questions about the documentation situation. And we have questions about what it would take to stabilize the company's technical infrastructure." "Those are 3 different questions," I said. "Yes. Which one would you like to start with?" "The third one," I said. "Because the answer to the third one makes the first 2 less urgent." Gerald Ashworth had the particular quality of a man who had been in enough boardrooms to recognize when someone was being precise rather than evasive, and to appreciate the difference. "Go ahead," he said. I told him what stabilization required, not my return, but a structured knowledge transfer conducted on my terms, at my consulting rate, with a formal acknowledgement from the board that the documentation I held was my personal property and that any engagement was voluntary and contractual rather than obligatory. I told him the SEC response needed to be filed within 4 days and that I was willing to provide the response template and parameter documentation as the first deliverable of a consulting engagement, billable at my standard rate with a 4-hour minimum. I told him that the Helix routing remediation across all 3 affected environments would require approximately 18 hours of consulting work, and that I could begin within 48 hours of a signed agreement. "And the longer term?" Gerald asked. "The longer term is Vantage's problem to solve. I can help you stabilize what exists. I can't fix the decision that created the situation. The decision being Marcus Holt's appointment. The decision being the process that produced Marcus Holt's appointment," I said. "The appointment was a symptom." Gerald was quiet for a moment. "Ms. Solis, I want to ask you something directly, and I'd appreciate a direct answer. Did you anticipate that this situation would unfold the way it has?" I thought about the technical journal. Page 147. Page 203. The Apex source files on my personal drive. The timestamped access logs going back to 2011. The consulting rate sheet I'd sent Warren on March 13th, 2 days after the email, before the first system failure had even registered on the dashboard. I anticipated the possibility, I said. So I kept good records. Marcus called me for the last time on April 16th, the day after the board meeting. He called from his personal cell, not his work phone, which told me something about what had happened in the 24 hours since Gerald Ashworth had presumably reported back to Warren. The call came at 8:22 p.m. I answered it because I had said everything I needed to say in writing, and I was curious, in the detached way you're curious about the final chapter of a book you've already read, what his last words would be. Renata. His voice was quiet. Not the corporate jargon voice from the early voicemails, not the stripped-down voice from the week 3 message. Something flatter. The voice of someone who has run out of registers. Marcus. I got a call from Gerald Ashworth today. He told me the board is conducting a review of my appointment. He told me Warren is a pause. He told me Warren is being asked to recuse himself from the review because of the conflict of interest. Okay. I want you to know that I didn't know. About the documentation. About how the systems worked. About what you were I didn't know what I was walking into. I know you didn't, I said. That was the problem. I'm going to lose this job. Probably, I said. Not unkindly. Just accurately. Was there anything I could have done differently? From the beginning. I thought about Knowledge Transfer Tuesdays. The emoji. The notebook with the word routing and a question mark. The 4-minute voicemails. The SEC request sitting in his inbox for 6 days. You could have told Warren you weren't ready, I said. That would have been the honest thing. And the honest thing would have been better for everyone, including you. Silence. Long enough that I thought he might have hung up. Yeah, he said finally. I know. I didn't say anything else. There wasn't anything else to say. He hung up, and I sat with the phone in my hand for a moment, and then I put it down and went to find James, who was in the living room reading, and I sat next to him on the couch and didn't say anything about the call, because there was nothing about the call that needed to be said. It was over. It had been over for a while. I was just the last one to hang up. Within 48 hours of that final call, the board's review produced its findings with a speed that suggested the findings had been forming for some time, and the review had simply given them a formal container. Marcus Holt was removed from the principal architect role on April 18th, effective immediately, citing a misalignment between role requirements and current qualifications, which is the corporate equivalent of saying the wrong person was hired without saying who hired them or why. A phrasing so carefully constructed that it could only have been written by someone who is simultaneously trying to correct a mistake and avoid accountability for it. Marcus received a severance package of 4 months' salary, $73,000, based on the $219,000 annual compensation he'd been given for a role that had paid me $164,000 for 14 years, and a non-disparagement agreement that he signed, according to Priya, without reading. She watched him sign it. She documented the time, 2:47 p.m. Some habits are contagious. Warren Holt retained his CEO title, but was placed on a 90-day performance improvement plan by the board, which is a thing that happens to CEOs when the board wants to send a message without triggering a severance clause. The performance improvement plan required Warren to implement a formal technical leadership appointment process with independent vetting, a knowledge management program with documented succession protocols, and a compensation equity review for senior technical staff. The compensation equity review was Gerald Ashworth's addition. He told me this himself, with the quiet satisfaction of a man who had been raising the issue for 2 years and had finally found the moment when raising it produced results. The financial accounting, as compiled by the external audit firm the board retained in May, was specific and not flattering. The Helix routing degradation across 3 client environments had resulted in $1.4 million in SLA penalty payments. The Cascade financial account had not renewed, $2.8 million in annual revenue, gone, with Diane Reyes citing loss of confidence in technical leadership continuity in her formal termination notice, which was the most diplomatic way I have ever seen someone say, "You replaced the person who knew what they were doing with someone who didn't." Northgate Capital Partners renewed but renegotiated their contract terms, extracting a 12% rate reduction worth $396,000 annually. The SEC response, filed 4 days late after I provided the template and parameter documentation under my consulting agreement, resulted in a formal deficiency notice and a $180,000 fine for inadequate compliance documentation practices. Emergency contractor costs, overtime, and external consulting fees, including mine, totaled $847,000. Total financial impact of the 6-week period following Marcus Holt's appointment as principal architect, $5.623 million. For a company with $180 million in annual revenue, that was 3.1% of the top line. Because a CEO wanted his son-in-law to have a title, and the person who held the knowledge had finally, after 14 years, stopped giving it away for free. My consulting engagement with Vantage lasted 6 weeks. I stabilized the Helix routing across all affected environments, resolved the Sentinel authentication issue, and provided the SEC response documentation. I billed 94 hours at $340 per hour for a total of $31,960, which was, I noted to Claire Osei with the dry amusement of someone doing arithmetic for the pleasure of it, almost exactly what Vantage had declined to pay me as a salary increase in 2022. Claire said, "The universe has a sense of humor." I said, "The universe has a spreadsheet." I did not return to Vantage as an employee. The board asked, through Gerald, whether I would consider a restructured principal architect role with revised compensation. I told Gerald I appreciated the offer and had already accepted a position elsewhere. He asked where. I told him. He said, "Good. You should be somewhere that deserves you." Gerald Ashworth was 67 years old and had been in enough boardrooms to know the difference between a company that deserved someone and a company that had simply learned, expensively, that it needed them. I liked him for that. A year later, I was principal systems architect at Meridian Data Group, a financial infrastructure firm in Chicago with $340 million in annual revenue and a technical team that had been built, deliberately and carefully, around the principle that the people who build the systems should be paid like the systems matter. My base salary was $247,000. My performance bonus had paid out at 24%, $59,280. I had an equity participation agreement that would vest in 18 months and that represented, at current valuation, approximately $340,000 in potential value. I had a title that matched what I did. I had a manager named Christine Park who had read my technical journal. I'd shared the relevant sections during the interview process because transparency is a habit too, and had said, "This is the most thorough documentation I've seen from an individual contributor in 20 years. I told her it wasn't documentation. It was just good engineering practice. She said, same thing. I had taken 3 full weekends off in the past 6 months. Not partial weekends, full ones, where the laptop stayed closed and James didn't have to save me a plate because I was already at the table. Sophia, who was now 14 and had opinions about everything with the specific confidence of someone who has not yet been told that opinions require evidence, had started asking me about my work in the way teenagers ask about things they're actually interested in but won't admit to being interested in. I told her about Helix once over dinner, and she listened with the focused attention she usually reserved for things she was considering as a future career. I didn't push it, but I noticed. Priya Chandrasekaran was promoted to Systems Analyst 2 at Vantage in June, with a 19% salary increase that the Compensation Equity Review had identified as a correction to a long-standing underpayment. She texted me when it happened. The review found 14 people who were underpaid. I was one of them. Thought you'd want to know. I did want to know. I told her she'd earned it, which was true, and that the 47-page documentation folder she'd kept had been part of what made the board's review possible, which was also true. She said, I learned from the best. I told her she'd learned from herself. The best thing I'd done was tell her to keep records. She'd done the keeping. David Okafor left Vantage in August. He took a director role at a healthcare technology firm in Dallas and sent me a LinkedIn message that said, I should have fought harder. I want you to know I know that. I responded, you fought the way you knew how to. That counts. It did count. It just hadn't been enough, which is a different thing from not counting. Marcus Holt's LinkedIn profile. As of the last time Priya checked, she checked occasionally, with the methodical consistency of someone who had documented his tenure and felt a professional obligation to document its aftermath, listed him as a strategic technology consultant, which is what LinkedIn profiles say when someone is between positions and optimistic about the framing. He had not listed Vantage in his experience section. He had not listed the principal architect title. He had listed his MBA prominently at the top of the page, which is the professional equivalent of leading with your height on a dating profile. Technically accurate, strategically revealing. Warren Holt completed his 90-day performance improvement plan and retained his CEO title. The knowledge management program was implemented. The succession protocols were documented. The compensation equity review resulted in salary corrections for 14 employees totaling $847,000 in annual payroll adjustments, which was, the external audit noted, less than the cost of 6 weeks of operational failure caused by the absence of the knowledge those employees held. Warren sent me a formal letter in September acknowledging my contributions to Vantage's technical infrastructure and thanking me for my consulting engagement. I read it once. I filed it. Not because it mattered, but because I file everything. It's a habit. Here's what I know, and it's not a lesson about sending emails, because the email was never the point. The email was just the moment when I stopped subsidizing a system that had decided my knowledge was available for free. For 14 years, I had answered questions I wasn't paid to answer, trained people I wasn't paid to train, maintained systems whose value I wasn't paid to reflect, and called it loyalty. It wasn't loyalty. It was a habit I'd mistaken for loyalty, which is a mistake that's easy to make when the habit is useful to everyone except you. The email was 247 words. It said, "I know what I have, and I'm done giving it away." Everything that followed was just the company learning, at a cost of $5.623 million, that I had been right about that. If you've ever felt like the person everyone leans on while someone else gets the credit, if you've ever trained your replacement and been told to report to them, or answered questions at 6 a.m. that weren't in your job description, or watched your institutional knowledge get handed to someone with the right last name, I hope this shows that your knowledge is yours, not the company's, not your manager's, not the person they promoted instead of you. Yours. I share workplace strategies and corporate analysis every week that help you understand the difference between loyalty and subsidy and how to stop confusing the two. Like and subscribe if you found value here. Remember, they can give anyone a title. They cannot give anyone what you know. And the moment you stop giving it away for free, the systems will show them exactly what it was worth.